Welcome to the October 16th, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. It's an action-packed 5 to 10 minutes each week with the charts and graphs that McGowan Group Wealth Management produces for our clients. Deep research brought to you in a concise format to take you to the next level of great decision making. This is proof that we love our clients because we've been hard at work all week to bring you a powerful update that can help you in the year ahead. What was the reaction to the weekend declaration of all-out war by Hamas and then Israel? Hot war in the Middle East. As you would expect, there are certain market gyrations that happen. So I'm going to cover what happened, and we'll see how does that play into the forward look for the financial markets in light of the Middle East conflict and the all-out war with Hamas and Israel. So the Sunday night futures, I tuned in on Sunday night, went to the futures market, and the Dow had descended actually below 33,000. So this doesn't show the futures going to 33,000, but that's exactly what happened overnight on Sunday night to the futures. Well, by the end of the week, the Dow at the highs of the week had approached 34,000. Part of it is earnings season just began. 190 companies reported Friday. JP Morgan, Wells Fargo, all exceeding expectations. Impressive results from JP Morgan. So if there is a banking crisis or a default crisis, it's clearly not here at the third quarter results coming in. The other impact, on Sunday night, West Texas Intermediate crude futures spiked to over $87 a barrel, up $4. And on the last trading day of the week, back up over 86. Why? The United States, in light of what's happened with Iran, potential conflict there, and of course Russia, they decided to enforce the Russian oil sanctions, and they went after two entities. The Treasury Department did. Oil immediately spikes over 3. What happened in oil? You had a huge run, basically $30 a barrel in just about 3 months, 65 to 95. Now think of yourself as an oil tycoon. You got a bunch of oil wells, and you're like Pioneer and ExxonMobil, and you see this huge spike, and you're saying, I probably should lock some of that forward production in at a good price. And that's exactly what happened here. This is typical in the commodity markets. You retraced about half of that massive $30 a barrel spike. Why? We went into undersupply. And by the end of the week, back over 86. So that's a normal commodity correction, retracing about half of a big move really fast as producers want to lock in that price. Two of the producers, big deal of the week. So Pioneer Natural Resources had been in talks with ExxonMobil. That was reported a few months ago. And they announced it officially this week. So North Texas longtime natives, CEO Darren Woods and CEO Scott Sheffield of Pioneer, they got to be on CNBC. So Texas oil was the focus of the financial markets on Wednesday as they completed the deal for $253 a share equivalent. ExxonMobil's buying them in stock, and they believe they can save a bunch of money on efficiencies, get their lifting cost to 35 a barrel. Well, if oil's 80 something and it costs you 35 to get it out of the ground, $5 to deliver it, that's a pretty nice profit margin, about 100%. This is the Cushing oil inventories. So this is one of the reasons that merger was economic for both of those companies. What is this? This is the plummet of inventories at Cushing. So one of the biggest storage areas, Cushing, Oklahoma, how much oil do they have on hand? And you could see it here in 2020. They shut down the whole economy and boom, storage was full. That's 65 million barrels. Wow. Then it was drawn down in 22. Part of this was the invasion. So inventories at Cushing, according to oilprice.com, when you get below 20 million barrels in storage, you're down to the bottom of the barrel, the sludge, and it's harder to refine, operate, pump through a pipeline. In other words, it doesn't function as well. We are below 22 million at Cushing, and you can see this massive drawdown. That corresponded to lickety split going from 65 to 95. And that says you don't have an excess supply of oil right now. Any disruption, for example, if Iran were to disrupt oil trafficking, then you could see higher oil prices. Energy infrastructure is your best hedge, I believe, against inflation and that type of disruption. Here, this is the 10-year U.S. Treasury. Part of the reason September was a down month for the markets, historically it usually is, but see this, the spike? Everybody was wondering why the heck is the interest rate on the 10-year and 30-year Treasury way below the Fed funds rate. Well, part of that thesis is some institutions believe there could be a recession, and so they buy long Treasuries, and if the Fed has to lower rates, then they make a gain on it. Well, that trade didn't work because there's no recession. Economic growth in the third quarter was 4.9%. That's a great economy. Wow. And they sold U.S. Treasuries because the premise of a recession has been incorrect for about 18 months, and that put pressure on all the financial markets because you can lock in 4.8. Now it's 4.6. So that rate moderated. One of the financial knee-jerk reactions to conflict, geopolitical escalation risk in the Middle East, is you buy treasuries because that by definition is the safest place to have the money. What is this? This is turning out to be the trade of the second half of 2023. First half, the big trade that we all wish we coulda, woulda, shoulda was NVIDIA, artificial intelligence. And as it turns out, Microsoft is the first company that actually figured out how to make good money with artificial intelligence. And we cover some of the examples on the program at networthradio.com. Also, be sure to subscribe. If you like the broadcast, give me a like, subscribe, and better yet, share it with your kids so that they can get educated and they'll be better investors, and that may take some pressure off of us when we don't have to give money to the kids because they're doing just fine. All right, look at this. What is that? Novo Nordisk. That is the diabetes fat-reducing drug. We added it to our model portfolios, not a recommendation for your portfolio till you actually get a plan from McGowan Group Wealth Management. Get your office tour, meet the team, or we can do a Zoom meeting, and by the end of the meeting, you get your plan. All right, look at that. Both Novo Nordisk and Eli Lilly have, this is Ozempic and Wegovy, but the Mounjaro version is Eli Lilly's. Both companies made all-time new highs this week, nearly every day in a row. So that's becoming what we'll call the blue chip trade of the second half of 2023. Now, this is Dallas-based Energy Transfer. It's a pipeline company. And Kelsey Warren's done a great job. He paid off a lot of debt after expanding the pipelines from 2014 to 2018, started paying back debt after things recovered in the pandemic, buying back shares, nice dividend, has raised the dividend. That is a nice chart since March. And you could see in the banking crisis of March, that was a pretty good entry point there with a decent yield. Now, this is a warning. China. Two things that were wrong in retrospect. Everybody's going to make a bunch of money in China. And some people did. So back in 2004, the China Exchange Traded Fund, low-cost ETF, comes out, goes from 17 to 72 by 2007. Wow! Now, people tend to pile into things like that. Well, Then we had the 2008 crisis and it went to just below $30. And here you're kind of grinding away. We had the bankruptcy of Country Garden and Evergreen, the two largest developers in China. Turns out they borrowed a bunch of money and issued stock to investors outside of China. Now they're going to keep the money because they're bankrupt. And of course, the China index responded. It went all the way back to 2006. Not only have people not made money in China since 2006, that's a long 17 years, but if you look at the dollar weighted, people piled into this thing when it looked hot, and so on a dollar weighted return, overall, it's lost money for people. So be careful when you hear a theme like China, oh, there's a billion of them, you're going to make a lot of money. Well, it doesn't always work, and of course you need to know when to exit. That's part of our job at McGowan Group Wealth Management. We look forward to doing a brainstorming session with you. It'll result in a plan within the hour, delivered right to your email, and you can get the tour and meet the team.